Thanks for joining us today.
Winsley, can you still go live on Facebook?
You're muted, Winsley.
Yes, I believe I can.
Okay, cool.
So I will just hit go live now.
Perfect.
Oh,
I think there's usually a minute or so delay, so go for it.
Okay.
As you're all hearing, we're bringing folks in from the Facebook Live session. And once we've completed that and given it about 1 more minute, get your last coffee, make your last bio break, and then we'll get started with our EEC session today on the Nebraska Microenterprise tax credits. Thanks for joining us. So we are streaming live now, and we have hit the bottom of the hour. So we'll formally begin our session today. Thank you all for joining us, and hello. Welcome to the Entrepreneur Education Collaborative's virtual session titled the Nebraska Advantage Microenterprise Tax Credit, or Microenterprise Tax Credit, with CPA Regina Krebs. Today is Wednesday, December 21st, 2022. Welcome to the madness of the holiday season. We've got a gift for you today, potentially, and a tax credit that you might qualify for. I'm Blake Martin, local entrepreneur, like many of you, and a founding member of the Entrepreneurs Education Collaborative, or the EEC as we call it. The EEC, who hosts all of these sessions and will continue to do so in 2023, is a collective effort of the following community resource providers: the Better Business Bureau, Catholic Charities, the Greater Omaha Chambers Reach Initiative, Nebraska Enterprise Fund, NBDC, OPPD, the SCORE Mentors of Greater Omaha, the Business Ethics Alliance, the U.S. Small Business Administration, and Grow Nebraska Women's Business Center. Now, we know you're not going to check that list twice. It's a lot, but just remember, we are a collective of community nonprofits, and we're the one-stop shop for all things small business education around here. Couple of reminders before we do the introductions and get started with the session. Turn your phones to tase mode. It'll help you from being distracted. And if you're having any problems with bandwidth, you might try closing out all your other browsers. Do be aware that, as always, all participants will be muted throughout the session to avoid any distractions, but we'll be checking questions real time, both via the chat function in Zoom, as well as any comments that are submitted by our friends who've joined us on Facebook Live. So submit those questions anytime or comments throughout the presentation, starting now. And after Regina does her presentation, we will have a formal section, about half of our hour, for Q&A. And we'll submit those questions and get all of them answered for you. We try our hardest to get all the questions answered. If we run out of time, we will make sure that we get back to you with the appropriate answers. And of course, if you think of that question after we end the session, just reach out to whomever you know best in the EEC, and we'll make sure that your question gets answered. And of course, we are going to give out the contact information for Regina today because she is a CPA that practices in Nebraska. We'll be continuing with the monthly virtual Wednesdays in 2023, and all of those are posted to our Facebook page. So including today's session, within a day or two, you will see this session posted to our Facebook page. All you got to do is just go into Facebook and search for Entrepreneurs Education Collaborative, or you can Google that and it'll bring you to the Facebook page. And of course, we're doing the Facebook livecast right now. So that is on our Facebook group, which is facebook.com/groups/GOC.reach. So those sessions in 2023, we will be doing them every other month in 2023, starting with January 18th. We'll continue with the third Wednesdays at 11:30 to 12:30, each of the months that we're doing it. So January 18th is the third Wednesday. It'll be a virtual session, and it's going to be focused on something very timely for the beginning of the year: pivoting your business model to adapt for change. There's constant change going on in the business environment right now. That's not going to change in early 2023. And we have an expert, Jacob Malusek, who's going to be talking about how to use the numbers of your business to adapt for change in a simple way. If you haven't heard him speak before, You're definitely going to want to sign up for this one. And then March 15th, we'll have an in-person and virtual hybrid session on cybersecurity. It's only a matter of time before you're targeted, including small and micro businesses. So you got to be prepared for that. We're going to give you some great tips on that. Now to the good stuff for today. On today's session, I get the honor and the privilege of introducing Regina Krebs. So a little bit on her bio and why we have her doing this session. She is a licensed CPA and received her BSBA from Creighton University. She owns and operates her own public accounting firm in Neligh, Nebraska. She specializes in tax and compliance reporting for small businesses, farms and ranches, and small governmental entities, just the kind of stuff we're going to talk about today. She serves as a county commissioner, has been extensively involved in economic development at both the governmental and entrepreneurial levels, and has even testified before the legislature on better implementation plans for Nebraska's state tax credits for entrepreneurs. So she is intricately involved in this topic. With that, I want to thank you very much for volunteering your time and joining us today, Regina, and I'm going to turn the floor over to you.
Thank you. We're going to get started here right away because there's lots of things that I wanted to review on the microenterprise tax credit for you all, and leave plenty of time for questions because it can be a little, there's a lot of moving pieces in the microenterprise tax credit. So with that, just a second here. I can get my slides to switch, sorry. There we go. Just a little bit about me. I graduated from Creighton University. I am a farm wife with 4 kids, 2 boys and 2 girls. I got 25 years worth of working with farms, ranches, small businesses, and local governments. And my contact information is down here, but I will put it at the end also. So I usually do tax credits 101 class, but we're going to take a deep dive into the microenterprise portion of the tax credit. There's lots of other tax credits out there that I've implemented for small businesses. But like I said, we'll just touch on the microenterprise tax credit today. First of all, along with any kind of tax law, excuse me, we need to get into some definitions. Some of these may be elementary, others maybe a little bit advanced, but we need to make sure that we understand exactly what we're talking about on these terms. So tax credit versus a tax deduction. A tax deduction allows the applicable amount to be deducted prior to the calculation of the tax. And we'll go through an example of all of these. A tax credit is a dollar-for-dollar reduction in taxes owed. This is typically the better deal for the taxpayer. Okay, and then also we need to discuss on the tax credit side whether or not they're refundable versus non-refundable. The non-refundable credit must offset any tax that's owed. Most of them, however, can be carried forward or backward. But at the end of the day, if you don't owe any tax, you don't get any tax benefit from a non-refundable tax credit. The refundable tax credits, these are the best type of tax credit. So you get the credit even if you don't owe any tax. Basically, if you don't owe the tax, enough tax to take care of the refundable tax credit to offset it, you get any extra in the form of a refund check. So a lot of questions, probably the biggest question that I get from small business owners or entrepreneurs that are looking at starting a small business, they want to know what's out there for grants. I'm starting a small business. Are there any small business grants that I can get? However, most of the grants that are out there are individualized. They're hard to get. There's a lot of application process, but really the state of Nebraska has offered the microenterprise tax credit as basically a grant. Yeah, so basically see the refundable tax credit. And we'll talk about that in the example that I do. Okay. The tax deduction versus the tax credit and the refundable versus the non-refundable. Gross income is what we've got. We start out with our gross income, and then your tax deduction comes off of the gross income before you calculate your net taxable income. So if we have $50 worth of tax deductions, then we end up with net taxable income of $100. You calculate your tax on that $100. So at 25%, your tax is going to be owed is going to be $25. Then we get into the tax credit side. So over here on this first example, the non-refundable tax credit is $10 in this example. You basically get to take that off of the $25 that you owe for net tax actual due of $15. So basically, if you have a $25 non-refundable tax credit, you will owe $0. However, if you have a $30 non-refundable tax credit, you will still owe $0. The $5 just goes away. Over here, we looking at the refundable tax credit. So on the same scenario where you owe $25 in tax, the refundable credits are $50. The government is actually going to send you a check for the remaining $25. So like I said, that's the best possible tax credit. Okay, we're going to look at the microenterprise tax credit. We're going to do an introduction on it and get to some information here. The microenterprise tax credit authorizes $2 million each calendar year. There's a potential that some of these funds will roll over. Oh, sorry. So there's at least $2 million available each year. It could possibly expand up to $4 million, depending on the funding requirements the previous year. These are refundable individual income tax credits. So again, back to our refundable tax credit, these are kind of the best possible tax credits that are available. And in all practical purposes, if you follow the program guidelines, they become a lot like a grant. The individual applicant must be actively involved in the operation of the micro business. So if you own a rental down the street, that doesn't count. If you own shares in a small business but don't run the day-to-day operations of the business, those don't count either. The applicant must be involved in the day-to-day operations and making the day-to-day business decisions of the business to be qualified for this. The business must demonstrate and provide an example of the growth plans that they have for the business. There is a 2-year attainment period. The credit is equal to 20% of the increase of either new investment or new employment. And the total lifetime tax credits claimed by any single applicant or business is limited to $20,000. So what this ends up looking like is if you have $100,000 in new investment or new employment over a 2-year period, you can max out this credit and receive credit of up to $20,000. Okay, what is a micro business and how do I qualify? Yes, more definitions. Welcome to tax. We'll go into them. The businesses must have 5 or fewer full-time equivalent employees at the time of application. So this is calculated at full-time equivalencies, not the number. So basically, if you have 6 half-time employees and 1 full-time employee, the 6 half-time gets calculated at 3 employees, and the full-time would put you up to 4. So even though you have 7 employees, you would still qualify for this credit. Must participate in E-Verify. It's the federal employee verification program. That just, we have to run reports off of that. We have to run the verification program off of that, and I'll talk a little bit more about that later. The micro business must be located in the state of Nebraska. It is an active business, not a passive, as defined by federal income tax purposes. Again, the rental house down the street will not qualify. Farms and livestock operations may qualify, but the business operations net worth has to be less than $500,000. And we have to provide balance sheets signed off on by a professional involved in the business. And we must provide an estimate of the planned investment and/or employee compensation increases when we apply for this tax credit. Okay, I think my business qualifies. Yay! But what is business growth? You guessed it, more definitions. Okay, business growth equals investment and/or employment for the purposes of the microenterprise tax credit. So investment are expenditures investing in the business's future. Types of investment that count are real property. You can buy a business building, a warehouse, a storefront, parking lot. So that all qualifies. And then personal property, such as machinery and equipment, office equipment, anything, personal equipment used in the business other than autos. Anything licensed does not count, however. And then for our farms and livestock operations, breeding livestock would also count for this. Increased repairs. So a lot of times what I see on this is small businesses need to do extensive repairs on their business. They need to replace a roof, or the forklift in the warehouse needs an overhaul or something like that. And then any advertising, that's pretty self-explanatory. And then any legal or professional fees. So on our startup micro businesses, if you do an LLC and the attorney charges you $1,000 to set up the LLC, that would also be qualified investment. And then the last line here is an increase in leased property, real or personal. So this gets a little bit complicated, but typically if you sign a lease, this could be huge because they are including leases that are signed up to 10 years. So if you rent your property, you rent your storefront, and you sign a lease and you pay $1,000 a month on your lease, for the purposes of the microenterprise tax credit, you could end up with a $60,000 expenditure to collect your tax credit on a 5-year lease. Well, and we'll go through a couple of examples on that. Compensation obviously is just employee wages and health insurance costs, wages, salary, OT, vacation, health insurance. The only thing that is not included in that is employee. You can't pay your one employee $100,000 a year and get the credit. So there's a maximum amount of wages, and it's 150% of the average weekly salary in the state of Nebraska. So there is a limitation on the wages. Okay, my business is ready to grow. Can I start today? And the answer is, it depends. So we're going to discuss some timing issue considerations, especially since we're here at the end of the year. If you do think you're going to qualify for the microenterprise tax credit, we may want to do some business planning at the end of the year. So the reason why is 2022 applications have closed already. Those applications closed the 1st of November. So if you're ready to start your business and you're ready to launch it, if you want to launch it before Christmas, you may want to think about that, because if you wait and launch your business after the 1st of the year, then you can reapply or apply for the tax credit and get the tax credits for the business as long as it's started and put into operation after the end of the year. So I had a small business that wanted to open like on New Year's Eve, and it's like, okay, really? So they didn't open on New Year's Eve. They did their grand opening actually the following Saturday. So that way they could get the $20,000 in tax credits because they made sure that they fell within the calendar year that they applied for that. Okay, the application date is an important date. Typically, it's the postmark date. So if you apply on April 1st, that is your application date. And that date triggers a lot of different things. That triggers your base year. So your base year is the calendar year prior to the application date. And we'll go into why that is important. Current year deadlines for applications are November 1st. So if you apply for the tax credit prior to November 1st, what ends up happening is it ends up backdating your investments to January 1st. So I've had several new businesses start. They don't come to see me until October, and they say, oh, guess what I did in June? I started a business. Okay, well, we still have time to apply for the tax credit by November 1st, and then that backdates everything that they've done this year into our tax credit. And it also is E-Verify timing. If you currently have employees and you haven't used E-Verify in the past, that's fine. But E-Verify has to start after your application date. So if your application date is April 1st, an employee that you hire on May 1st has to be E-Verified in order to qualify for this business tax credit. But you don't have to backdate, and you actually can't backdate an E-Verification on an employee that you had in February. So new businesses versus existing businesses, we'll discuss that when I go through the examples, and then the timing issues, December versus January. Okay, let me move some examples over here. Okay, this is the application, and this is what we have to fill out. So you can see here, I just put in some data. This is going to be a new business that started. So in column A, what happens on the new businesses is it's pretty simple to get qualified because your base year is 0. All of these are zeros down here because it wasn't a business last year. Year 1, so your column B and D is your 2-year attainment period. So for your first year in business, maybe you bought a $50,000 building and $25,000 worth of equipment to put into that. So your purchases of depreciable assets would be $75,000. You spent $2,000 on advertising the new business, and you spent $3,000 in legal fees to get the LLC set up. So this first year, you made investments of $80,000. So you can come over here, you've got $20,000 left to max out this credit. So in the second year, maybe you bought $10,000 worth of additional equipment, but the $50,000 building that you bought in year 1 needed a new roof. So you put $15,000 worth of roof and windows or siding or something like that in repairs and maintenance. You spent another $2,000 advertising and another $1,000 in legal fees. So year 2, you spent an additional $28,000. If we go over here, in the 2-year attainment period, you're planning on putting in $108,000 into your business, which would qualify you, the calculations, 20% would be $21,000. The maximum credit that you can receive would be the $20,000 over here. So that is what you would actually apply for. Down here in the next example is an example with that net lease that I showed you. So if you are currently in business or renting a building, you can come over here, and maybe you don't have any depreciable purchases in your prior year. It's a small business. You're not doing much advertising, nor do you have any legal fees. So the only expansion that you're going to do is you're going to sign a 5-year rental agreement on the property that you currently have. So again, we'll do $2,000 worth of advertising, $3,000 worth of legal fees. The $60,000, we can claim that currently in the year that you sign the lease. That becomes an expense for the microenterprise tax credit. So you can see that we're bringing in the $60,000. So in this first year, we've increased our total investment to the $65,000. And then second year, maybe you did buy $10,000 worth of equipment, advertising, you had another $13,000. So in a lot of my small businesses, $100,000, depending on the small business, is easily attainable, but then some of them are super small and not necessarily. So you do not have to spend $100,000. There is no minimum to spend. So in this particular case, they didn't spend $100,000. They only spent $78,000, but they're still entitled to a $15,600 tax credit. And then in my final example is an existing business. And this is where the base year calculations come in. So in 2020, the existing business had a $10,000 asset purchase. What happens when we come over here is in year 1, which is this year, they have a $5,000 asset purchase, and in year 2, they're planning another $5,000 asset purchase. But because they purchased $10,000 last year, The $5,000 in each of the year doesn't grow beyond the base year. So they don't qualify for the tax credit in this particular case. But this is where I was talking about a timing issue. If the $10,000 was purchased at the end of December, if they would have moved that to the beginning of January on a timing issue, then they would qualify for basically $4,000 worth of tax credit, because you move this $10,000 over here to the year one, and that becomes $15,000. So like I said, there's some timing issues in tax planning that can go into this to maximize the tax credit. And over here, this is one last example. The $10,000 equipment purchase, which is from the last example, but they spent an additional $50,000 on equipment in year one. However, we have to take this $10,000 off, and we have to show just the investment growth. So we only had $40,000 worth of investment growth in year one, $5,000 in year two, which doesn't get beyond the $10,000 from year one. So in this particular example, even though we spent $65,000 in new growth, we only get $40,000 worth of expenditures, or an $8,000 tax credit. Okay. I think my business qualifies. I have a growth plan. Now what? We get to do paperwork. So how do I qualify? The process for qualifying for the microbusiness credit is all businesses must file with the Nebraska Department of Revenue for all required tax programs. What they're looking for in the required tax programs is basically sales and or use tax. So for instance, I've got farmers that have applied for and are qualified for the microenterprise tax credit, beginning farmers. The Department of Revenue is taking the stance on this particular program. That is, while they may not have to file sales tax, while they may not have to file sales tax, they are technically eligible to file a use tax. So we still have to file the Form 20, apply for the use tax form, and basically we end up getting a use tax form in the mail for this micro business. And we basically, if they don't have anything that they purchased tax exempt or that they owe use tax on, we just basically file zeros for the next 2 years. The business must get set up for E-Verify if they're not already, and verify the eligibility of all new hires. This, for the micro businesses, this tends to be one of the catching points. Oh, sorry, just a second here. Because this can be a cumbersome process. It's pretty self-explanatory as you work your way through it. But for a lot of my micro businesses, if they've only got 1 or 2 employees, they don't intend on hiring a lot of them. They're not going to use E-Verify on a regular and consistent basis. So I've got a master E-Verify account that I have set up that I actually can go in and set up E-Verify accounts for my clients and do their eligibility verifications. They just give me a call and say, hey, I'm hiring somebody new. Can you run the E-Verify for me? And we can do that. Complete the tax credit application and be approved by the application deadline and or until funding is exhausted. So the microenterprise tax credit has not used all of its funding in the past several years. However, technically it is a first come, first served basis. When I started using this tax credit 15 years ago, they did run out very quickly. If you didn't have your application postmarked by the end of January, they were out of funds. They changed up some of the funding requirements, so those funds don't go out near as quickly anymore. But that still is a first come, first served basis that I want everybody to kind of keep in mind. Then after you've been, the department will review your application, and they will actually send you a form that says you are qualified for X number of amount of tax credits. From then you grow your business, but you need to keep receipts. As a tax accountant, I'm always harping on that, but that is extremely important in this particular case, because when we go to claim the tax credit, the process of claiming the tax credit is basically going through a mini audit. You need to send in all of your receipts, your documentation into the department before they will approve your tax credits on your individual income tax return. So, and you will claim your earned tax credits on your individual income tax return on the Form 38N and Worksheet M. And again, with sending in all of the receipts, you will go through basically, like I said, a mini audit to make sure that the timing and the expenditures are appropriate for issuing the tax credit. Okay, I think that is the end of what I've got. Are there any questions?
Yeah, Regina, I have several, so bear with us. There's several great ones, and a few of them are examples. So
Okay.
the first one, the question is, who runs the program now? I believe it's Department of Revenue, but you can confirm. I tried for this credit 2 years ago, but the office running the program declared I was an employee of my broker-dealer rather than an independent financial advisor. I pay self-employment tax, control my business, etc. My broker-dealer only provides compliance supervision.
Right. So that is one nuance. If you are licensed or required to be licensed to do your job and you don't hold the actual license, you are required to you're not eligible for the business. So in that particular case, I run into that with investment advisors and real estate agents, basically. You know, while they're technically considered self-employed for federal income tax purposes, they don't actually hold that license to run that business, so they wouldn't be qualified.
Okay, super. Thank you for that. And if there's further follow-up, I'll watch for it in the chat. Somebody, here we go. My wife and I have a 50-50 partnership in our LLC. Do we both qualify for the credit?
Yes. So on a situation like that, again, the credit, the maximum credit for the business and or individual would be $20,000. So if you have a small business and you're the only owner, you qualify for the full $20,000 in that micro business. But if the micro business is a partnership, then yes, you can each qualify, but you can each qualify for $10,000 up to a maximum for the business of $20,000. You just fill out the application and you split everything in half.
Okay, super. Do self-rentals qualify for real property leases? For example, the building is owned outside the business by the business owner and then leased back to the business.
So that gets to be a little bit complicated. It depends on the timing of the situation. So ultimately, the micro business portion is leasing it. But because it's a self-rental, you would probably qualify if in the year you bought the business and then leased the building and then leased it back to yourself. But you can't own the business or the building prior and just sign a 10-year lease with yourself for that same property. So I think the ownership of the property and the lease agreements are going to get looked at, at the state level. But there's a possibility that yes, that would qualify.
So that one probably really important to check with your financial advisor, your CPA.
Correct. Yes.
Okay, then the next question: if you are an owner operator of a business but the only employee, can you still qualify for the credit?
Yes. Yes. And for that purpose, your wages are disregarded. If you're the owner operator, and that's only in a corporation environment. I mean, if you file a Schedule C and you're self-employed, then it would just be the Schedule C. Then yeah, it would be disregarded wages. So,
okay.
However, I have run into the case where if you're an S Corp, you would qualify and you still have to file the e-verification for basically yourself for the S Corp, but your wages would not qualify.
Okay, super. And the next one is, if everyone in my staff is a 1099 independent contractor, how would that be treated?
Okay, so the wages or the compensation are wages and salaries only. So if everyone is a subcontractor or a 1099, then they would not count towards your employee count, but they also wouldn't count toward the wage requirement or the growth. So if you had 10 contractors, subcontractors underneath of you, you could still qualify for the microenterprise tax credit because you don't have more than 5 employees. But on the other side, if you gave each one of your subcontractors a 20% pay increase, you wouldn't get the tax credit on that pay increase either.
Okay, super. Next one: how does the increase of inventory value relate to the tax credit, or does it?
So inventory does not, no, because it's not an investment. Basically, your investment has to be those expenditures, the advertising, the legal expense, the increased rent, those types of expenses, or a depreciable item.
Okay, super. And the next question: are there any issues in changing your filing status between base years, say 1 and 2? For example, taking S Corp election as an LLC in year 1.
Not necessarily, because the state of Nebraska will basically look at that as a transition company, and they will go back to the base year of whatever the underlying company is. So I haven't had an issue with them changing entity types.
Okay, super. And do you generally amend them to claim the credit? I think you just answered that. Most receipts have been, okay, most of the receipts have been uploaded to QBO. However, like most businesses, I don't have them all. Can the Nebraska Department of Revenue run off a profit and loss?
I'm sorry, what's that?
Well, I'll read it. Most receipts have been uploaded to QBO. However, like most businesses, I don't have all of them. Can the Department of Revenue run off a profit and loss?
So I just ran into this issue last year. Basically, no. They need to go back and actually get the receipt. Yeah, we've had entity that just had, yeah, QuickBooks Online receipts, and for like advertising, they had a website renewable monthly payment basically, and we actually had to go back to the company to get that. So the printout from QuickBooks Online did not work in that case. We had to actually get the physical receipt to the contract that they signed for those monthly fees.
Okay. And would a cooperative qualify for this?
So depends. This is the microenterprise tax credit as it's structured is claimed on an individual basis. So, and we're back to the individual that's applying for this has to provide day-to-day operations. So in our rural communities, we're setting up like cooperative grocery stores. So yes, technically that would qualify. However, you have to take, for instance, the manager of the grocery store has to personally apply for the microenterprise tax credit. And then I suppose basically reimburse the store or whatever. The store, the cooperative, the business entity itself is not the applicant, it's the individual.
Okay, super. So hopefully, and this is one, some of these you really need to talk to your CPA on a case-by-case basis. So,
Right. Yeah, like I said, there's a lot of nuances, there's a lot of options, and yeah, it's just really talking to someone that knows the program and getting, you know, tailored options for your business.
okay, great. And if the company buys some equipment that qualify for federal credits or are tax deductible, can they also qualify for this program?
Yes. So as long as they end up on your depreciation schedule, you would qualify for them.
Okay, super. And then I'm generally happy with my CPA, but we've never applied for the microenterprise tax credit. Does it make sense to have our current CPA try to do this first, or do we look for a specialist to assist in this space?
So it depends on a lot of CPAs. I've talked to several CPAs that quite frankly don't feel that this tax credit is worth their time. They think it's too cumbersome, which depends on, again, the individual business situation. So at that point, you would want to definitely talk to somebody that's obviously going to talk you through and get the tax credit. I have actually worked with several clients. I do, through the Center for Rural Affairs, work with several clients to apply for this credit. We work with their CPA to claim it on their tax return. But yeah, I definitely would work with someone that had an idea about how to go about getting the credit. So
great. And then following up on the one just above, when we asked about the purchase of equipment and so forth, the question was, they're an existing company, they want to buy next year either another company service van or construction equipment. I believe there's some concern on the service van. Is that correct?
correct. So anything that's a licensed vehicle does not count for the credit. But at the same time, when we're discussing the base year, it doesn't count as an equipment purchase if you purchased one in the prior year. So when we do business tax planning, where I had discussed, you know, a $10,000 purchase at the very end of the year may not be something that they want to do. They may want to carry that over to January. Likewise, if they're doing a licensed vehicle, that might be something that they'd want to do because it doesn't qualify for the tax credit, but it doesn't count against you in the base year either. So any vans, trucks, trailers, anything that is a licensed vehicle does not qualify for this credit.
So in that case, this person could apply, but they could only, their equipment would count, but the vehicle licensed equipment would not.
Correct. Yes.
Okay. And then they were asking too, their pass through, can the owner apply with different entities? For example, an LLC, sub S, etc. I believe up to 20,000 per individual. Is that correct?
Correct. Right. Yes. So each business, like I said, in the partnership situation, that business would only be qualified for $20,000, thus sharing the $10,000 for each partner. But likewise, it's limited to individual. So if you own 5 businesses, you would only be able to collect up to $20,000 on any or a combination of those 5 businesses.
Okay. And then I had somebody asked if there's any gross revenue caps. I believe there's no gross revenue cap.
No gross revenue cap. Just the employment cap.
Okay. And then we have a couple circle backs. One is on the licenses, just a comment. This particular person, if you remember, was the broker. They do hold an independent license for the broker dealership. Does that change anything?
So those get a little bit more complicated. If they want to just touch base with me or get the information, I can just touch base with them. So
okay, super.
To clarify the brokers and licenses and that type of thing. It depends on who holds the license and how the business is structured.
Okay, and I have a question about if nonprofits are eligible to apply. I believe you have to be a tax-paying company.
I'm sorry, what's that?
It was the question was, can nonprofits apply? I believe you have to be a tax-paying company to take advantage of this. Our 501c3s eligible.
Well, that's not necessarily. So the nonprofits could technically qualify, depending on what they do. You know, there are some nonprofits that run side businesses that would be subject to sales tax and that type of thing. And they, but yeah, nonprofits is kind of a gray area, I guess, and it depends on the situation. And again, we're back to the co-op. The entity itself can't qualify for this. It's an individual that's responsible for the day-to-day activities of the business that would have to qualify.
Okay, and that's a perfect segue. Circling back to the cooperative question, I guess you mentioned that the manager would have to be the individual to reimburse the co-op. Is it possible to have a member of the board of directors apply instead of the manager?
Only, again, you have to provide a detailed explanation of how you are involved in the day-to-day operations of the business and the time requirements put in. So some of the cooperatives, I've got very active board members. They're working in the business. They are making day-to-day business and managerial decisions. So yes, I mean, in that case, it really is just defaults back to that day-to-day involvement.
Okay. And then the last question I have, there might be some others that I'm missing, and Winsley may have some on Facebook Live, but if I have $100,000 in payroll, can I just use those pay stubs versus rounding up receipts? That would get me to a 20,000, correct? Just saying that rounding up receipts can be tedious.
Oh, yes. So correct. And yes, the easiest way to get to your 100,000 is what I do, and I know the department also prefers that. So yes, if you are new business and you have $100,000 worth of payroll that first year, by all means, just apply for the $100,000 worth of payroll. Yeah, because, and that's the same thing. I had a business at one point that had actually built a building, and they were the subcontractor for it. We basically pieced that building out into the building and the heating system and that type of thing until we got to our 100,000, because the other ones were like individual Menards bills for $500. You know, we didn't do that because, you know, we wrote off the heating system, the roof, that type of thing. We building components to make it the easiest to get to that.
Okay, super. Winsley, do we have questions from Facebook?
I am not seeing any right now.
All right. I think, Blake, with that, the only other comments, one of our participants offered us a Merry Christmas in the comments. So with that, I'm going to turn it back to you. Regina, thanks so much for all your answers and all your valuable knowledge.
You bet. I enjoyed it, and thank you so much.
Indeed, Regina. And all of you, please hold on for just one more minute before you jump off, because we want your input so we can continually improve these sessions. Susie, if you want to put up the poll, we want to ask you a few questions for your feedback on this session as we're planning the 2023 sessions. We'll give it 1 minute, and then we'll do some closing comments. And Susie, you just let me know when we hit a critical mass, and we'll wrap it up. As folks are answering, I will tell you, you've seen in the chat and you've seen in the slides, the contact information for Regina and the registration for our next session, which is January 18th. If you liked the style of today's session, you're going to like the January 18th style, applying some similar tactical, strategic approaches to ways to immediately improve your business and create some efficiencies. And I'll fill that time with, it looks like we've got one last question, if you don't mind, Regina.
Okay.
You mentioned the November deadline has passed, but then also mentioned that you can apply by January. Oh, okay. Can we get clarity on when we should apply if we haven't already?
Right. So the November deadline was for expenditures or investment for 2022. Okay. So they'll start taking, they'll take applications now. They're just dated on January 1st. So anytime in 2023, you can apply for investment and expenditures, which would basically make your 2022 your base year. And then 23 would be your growth, 23 and 24 would be your next growth years. So, and then 23, you know, if you say, okay, I'm thinking about doing something, but you don't actually do the investment until June. Again, as long as you apply by that November 1st, basically that takes and backdates your investment period to January 1st. So any investments, advertising, equipment purchases, that type of thing, that was made in 2023, you can get credit for as long as that application is dated prior to November 1st. Does that make
Perfect.
sense?
Thanks, Regina. Good affirming question at the end, and appreciate the detail on that. Great time to remind you all as a segue that these are always recorded and posted. This will be posted to our EEC Facebook page within the next day or two, certainly before the holiday. And of course, you've got Regina's contact information here if you can see the screen. As far as the poll, you'll all be happy to know that the top 4 responses we saw there, as far as content that you're interested in, social media, legal considerations, and then there's a few that were on recruitment and retention, essentially client retention, talent acquisition and retention. These are topics that are all planned for next year. So yes, we do listen to what you say because we've seen similar responses on prior polls. Thank you for participating in that. Thank you for being on today's session. As we said, again, thank you so much, Regina, for a very enlightening presentation, a very timely presentation. We truly appreciate your time and your effort.
Thank you.
Absolutely. The next session, as we said, you can always go to our Facebook page to see the upcoming sessions, and you will get a message with all the sessions for 2023, as well as that registration information for the January 18th, third Wednesday in January will be our next session. In 2023, we're going to every other month. So you'll have January and March, but of course, we'll always continue to post those to our EEC page on Facebook with the recording. We want to wish you all a wonderful, happy, and safe holiday season. We thank you for continuing this ride with us to hear wonderful content from folks like Regina. And we hope you all have a wonderful, happy holiday. Thank you all for joining us today. Again, thank you, Regina.